Alright, you may complain that the TCS, the big IT major, missed the rather lofty expectations from it. Dollar revenues were at $3.9 billion, slightly shy of the estimates we got in our poll, but profit came in line. Menaka Doshi is waiting there with the top brass of TCS, Chandrasekaran, the CEO and Managing Director of TCS is with her. Over to you, Menaka.
All right, Lata, thanks very much. Yes, lofty expectations, as you pointed out, and we'll talk about them. But before that, Chandra, good morning.
Very good morning.
Welcome to the show. Congratulations on the appointment to a second term. That means that for the next 20 quarters, we meet like this in the morning again? At least 20 quarters.
Sure.
At least. All right. Congratulations. I'm going to start by asking you a question that pertains to, sort of the recent bout of global economic uncertainty we've seen. Now, it's fairly recent, so it may not have shown up in your previous quarter, the numbers which you just reported yesterday. But I'm sure you're in touch with clients. We've seen what's going on with markets across the world. Are you seeing any sort of shift in client confidence, any nervousness on their part because of what we've seen take place over the last couple of weeks?
No, not really, Menaka. I think always the difficulty is to link the macro with what happens on the ground, and this is something that we have learned to live with in the last 4 or 5 years. I think varying points in time during the last few years, you see this macro commentary varying from what you hear on the ground.
Right.
Primarily because customers are going through a massive transformation in terms of preparing themselves for the future. So the IT and tech spending, I think, will continue.
Okay, fine. You've come in with an organic growth number which is at 4.6% on a constant currency basis, and that compares to 4.8% in the preceding quarter. So it's a pretty much same sort of performance, if I may say so. And dollar revenue organic growth is also 3.6%. I was listening into your analyst call yesterday. You sounded yourself a little disappointed with your performance, and therefore I asked you this question. What went wrong? You said you could have added about $20 to $25 million to top line, but for a few reasons. For instance, Diligenta, insurance, retail ramp-ups were slow. You spoke of North America being a little slower than anticipated, Latin America being very weak growth. Can you talk us through how all of these will affect the quarters to come?
I think you're correct. As far as this quarter is concerned, it's a very good quarter in terms of volume, 6.1%, and 4.6% is a phenomenal number by itself. But typically, we do better in Q2 compared to Q1.
Yes.
So our own estimate is that we would have done another $25 million, but we had especially 3 areas. I didn't comment on the North America being slow.
Okay.
North America, Europe, and UK, all these markets continue to do very well. The issues we have had is a few ramp-ups in retail. Even though retail grew at 5.6% on a sequential basis, the previous quarter it was over 7%.
Right.
So it was a little bit
lower than the average company growth that you've seen.
No, it's more than the company growth, but lower than the first quarter growth.
Okay.
So that affected, and insurance was soft last quarter. It continued to be soft, and then Latin America was the surprise. It should have grown marginally. Instead, it declined marginally. But each one of these may be 5-6 million, but the 5-6 million on its own is not a big material number. But when you add it up, $15-20 million, when you add it up when you're looking for 30-40 bips, it does make an impact.
Okay, so when you were asked how you would describe what your expectations from Q3 and Q4 were, in the analyst call last evening, you said, I expect we will do well. And that's sort of a middling description, given that TCS has always sounded a little bit more optimistic about growth. You especially said that FY15 will be better than FY14. On an organic growth basis, do you believe that this fiscal will now just about meet the last fiscal's numbers?
I think that's the linkage that you need to see. But basically, the requirement for us to perform for the whole year is predicated on 2 factors. One, that the exit rate that when we started the year was a little lower. So that means that we needed to continue.
What does an exit rate mean?
That's when we started the year, what was the growth that was already guaranteed based on the Q4 numbers.
Okay. Yeah.
And so Q2 had to be better than Q1 in order to catch up that run rate.
But it isn't on a constant currency.
It isn't on a constant currency basis. So that $15 million or $20 million gap will translate into a shortfall for the Q3 and Q4 as well. So when I said Q3 we're going to do well, Q3 is looking good from the overall demand perspective, but it's a soft seasonally weak quarter.
Right.
So that's why I said we can't count, because the retail ramp-ups will not happen typically in Q3 because of the holiday season. Customers are extremely focused on customer service in holiday season. They don't take any chances in terms of discretionary projects in Q3. And then the furloughs will come into effect for manufacturing, high-tech and telecom. So we need to wait and see. I can't today. The furlough numbers are not available yet. Typically, we'll know only November first week. Customers will communicate to us only in November. So given all that, I didn't want to make a fresh commitment on Q3.
Look, I'm reading off your, well, not body language because I couldn't see you on the analyst call, but at least from the tone and tenor of your responses. And I'm wondering whether FY15 will exceed FY14 numbers, you know, in the manner in which you had sort of expressed in the last quarter of the last fiscal. Does it now seem, because of the reasons that you've already outlined,
I did say that.
FY15 will be just about where FY14 was in terms of organic growth?
I did say in the call yesterday that it looks very difficult at this point in time to
exceed FY14?
To materially beat FY14.
Okay, so that's your outlook now for the remaining part of the year, unless we see either big surprises either on the negative side or on the positive side at that point in time. You've outlined some of the reasons for why you didn't do that additional $20 to $25 million. I'd like you to take me through how you expect them to perform. So retail, you already told me what the expectation for the next quarter is. The weakness in Diligenta / the insurance business, do you expect that to sort of, in a sense, recover over the next couple of quarters, or will we continue to see that as a pressure over the next
I think the good thing is that none of these three things are any sectoral weaknesses. Okay, all these three are one-offs. If you take the retail business, those ramp-ups have not gone away. Those ramp-ups will happen.
Sure.
But it's just that it may not happen in Q3.
Okay.
Or it may happen in a gradual pace in Q3.
Okay.
So we cannot count those revenues now, but they have not gone away.
Okay, so that's retail.
That's
insurance?
Retail. And the insurance has been soft. It's not that we have lost any business. It's just that it has to pick up momentum.
Sure.
So given that we are in the fag end of the calendar year, from the customer perspective, it's the last quarter. So I would just say that we should wait Q3 and Q4 and expect that we'll be in good shape for next fiscal year. So that softness will continue for 1 or 2 quarters is my estimate.
You've done fabulously well in manufacturing, in high-tech, but I understand this is to be attributed in part to your Japanese venture, manufacturing.
No, I think manufacturing and high-tech is to do with
So a lot of that is coming in. So, you know, I think if it wasn't for Japan, it would have been, you know, a fairly middling quarter in that sense. And it's not just about meeting analyst expectations, because I don't expect you to meet the numbers out there. That's not your necessary target, but it's the addition of Japan that's made you look a little better.
No, even in organic basis, manufacturing and high-tech have done exceedingly well. Okay. High-tech is 6% on a CC basis on organic growth, and manufacturing is again in above 5%.
Okay. I also want to touch upon geographies. You said Latin America will remain weak for the next few quarters, and so it will take some time to recover, so we're not expecting much growth from there. But India is looking very good, right? So you've seen 9% growth after what? A 7.2% growth number in the first quarter.
First quarter.
Yeah. You know, you said the deal pipeline in India is looking better. Have we turned a corner in India, given that you've had some weak quarters in the past?
I did say it in the call.
Right.
The first signs were last quarter, and then last quarter when I was asked, I said that I would like to wait for some more time.
Right.
And this quarter has been very good, and the current pipeline looks healthy. So I expect that we will continue to grow. Whether I'll deliver the same 9%, I cannot guarantee, but we are back to growth.
Okay, where is this growth coming from? What kind of projects or contracts are these? And, you know, do they have, so are they in line with the kind of margins you normally make, or is India any different, and will they therefore, as you grow your India business, will that also have an impact on margins either in a positive or negative fashion?
I think India per se operates at a lower margin than the international business, but it is not materially large. The India business is not materially large, so it's not likely to have a big impact on margins, negative impact on margins. But most of the business today is in the private sector, and I expect government order flows to come in, considering that the government has announced a large number of initiatives on Digital India.
Okay.
So that should come probably next fiscal.
Okay.
But currently, most of our order book is in the private sector.
Okay, I'm going to come back to India when we talk about CMC and your merger with CMC. But before that, UK growth was lower than the previous quarter, 2.7% versus 4.8% in the first quarter. Was that Diligenta?
No, that is due to the currency.
That's currency.
Yeah, UK
Same applies to continental Europe, 1.9% versus, I think, 4.5% in the preceding quarter.
See, continental Europe on a constant currency basis is 4% ahead of the number that you see in the rupee.
Okay.
So we lost about 4% continental Europe and in dollar
both
terms.
in UK and continental Europe, it's mostly currency headwinds, nothing else. Okay, fine. So, I think this brings me to some of the broader questions that we wanted to put to you. The merger with CMC. I know you got asked this last evening in the analyst call. I'm going to ask you this again. Why now?
Whenever we do this, you can ask this question.
No, but is it time with, let's say, you finally saw a pickup in your India business, or you're finally seeing India show some promise, and therefore you thought that it's better to approach the India market in a combined fashion, which is something that you've been doing anyways because it's a 51% subsidiary, but merging it will just strengthen that proposition. Why now?
So I think there are many reasons. One is that running two different companies has its own overheads. And consolidating it brings synergies.
How much?
Both not necessarily in terms of...
It's a small business, right, in comparison
but
relative
still,
to your
it's a management time. It's not necessarily the revenue growth or margin expansion.
Have you computed how much? Because you anyways consolidate these numbers. So financially, I don't expect this to have any impact on...
But it will definitely give more synergy for the teams on the ground.
Okay.
Because they will be bidding together. It will be one single team. We'll fully integrate it. Once the approvals are obtained, we will tightly integrate it. We won't run it as two different entities.
Okay.
And second thing is that it will also give a lot more management time. Unnecessarily, we don't have to run two different companies.
So, any synergy amounts that you can give us? Are they material in any way, really, in that sense?
From an India business point of view, I think it will be a big force, primarily because there are areas in India that CMC works, TCS doesn't work. There are areas in which TCS is much stronger in large scale system integration projects, where we will leverage CMC. Even now in contracts like passport, we do work jointly, but this can be a lot more tightly integrated.
Okay.
But I'm not going to give any numbers.
Okay, fine. I'm not surprised with that. Margins have come in nearer to 26%. Now, your defined band is 26 to 28%.
26.8 now.
Yeah. So, so I'm just looking at the, the whole number. Where are you investing some of this money? Because some of the decline in margins, if I can put it that way, is because of investments in growth areas. Yeah. Talk us through what those growth areas are, if you can.
See, I think we have maintained that we want to operate at 26 to 28%, so we will be very comfortable with that. The investments have gone in, for example, Japan is an investment because it's a low margin business at this point in time. So we thought that this is the right time to make that investment. So over the next few quarters, as the integration happens and as the momentum picks up, we'll start to improve the margins there. Digital is a big area, not only in terms of building capability, but also in terms of building intellectual property, whether it is in horizontal solutions, foundation solutions, or in vertical solutions in the digital stack, or in investing in capabilities like digital marketing or digital creative capabilities. So we're making whole lot of investments, not only in people, but also in terms of labs and so on and so forth. So
any inorganic efforts in the pipeline at this point in time? Some of your competitors have been buying up smaller entities in these areas. So.
Well, there is always effort to look at companies in the inorganic space. Nothing immediate.
Nothing immediate. Okay. You spoke of both Japan and digital. I want you to detail a little bit more now that you've had some more, experience with integrating the Japan business, growing it over the last couple of quarters. What is the size of opportunity of the Japan? What is the size of the Japan opportunity? Have you sort of had to reassess that size? How do you expect it to pan out from here onwards? When will the pressure on margins, because you said Japan is a low margin business, when will that lift? When will margins in Japan, come anywhere close to the kind of margins you do, globally? Otherwise,
I think Japan is a very large market.
Yeah,
the second largest IT market. So what we have now is $500 to $600 million business. Now what we need to do is to scale this business. So it is not about the market opportunity. Market opportunity is huge.
It's over 100 billion, is that right?
It's somewhere in that range.
Right.
But we are not even a billion. Okay, so given that, I think we have a lot of headroom to grow. And also what we have is very, very strong set of clients because of this acquisition.
Right.
So it is the execution game now. How do we integrate? How do we build teams? How do we bring all the global capabilities of TCS into the Japan market and again be relevant? And how will we execute?
What are your targets that you've set? You're at 500 million now. By when will you get to $1 billion in Japan?
Let me say this. I will say that in the next 2 to 3 years, we have to get to a growth momentum where Japan will grow faster than TCS average.
Okay.
And then I look at the business to build out to be few $1 billion. Whether I can give a timeline,
roughly.
Definitely will cross $1 billion, but it has to go to a few $1 billion in the next 5 years.
Next 5 years. This body language thing is you are toning down.
No, I'm not toning down. Do you realize from 500 to 600 million base to few $1 billion?
No, of course, it's very easy for me to sit here and say, oh, when are you going to double? Because it's just numbers to me. You have to do the execution.
But the opportunity is there. But you've got to execute.
So you're saying you will reach $1 billion over the next 2 to 3 years, if I can paraphrase some of what you've said,
yes.
And a couple of $1 billion in terms of the Japan opportunity over the next 5 years.
At least.
At least?
At least.
Okay, fine. That gives us some idea. A few quarters ago, you said you estimated the digital opportunity to be between $3 to $5 billion for TCS over the next 2 to 3 years. How much of that opportunity have you been able to exploit already in terms of the size of your digital business? And have you, do you feel the need to reassess that original number in itself, saying, no, look, we've sort of been through the past few quarters and now we think it's a bigger opportunity or a smaller opportunity?
I said in the call that if at all, I would say that number will only exceed that number. Where we stand now, based on what we see, the type of engagements we are executing on the ground, and the type of capabilities we have built, the size of the engagements, and the number of clients who are wanting to embrace digital. If you look at all of that, I feel that we will only exceed that number, but we are not sharing any numbers yet because we have
Give
not
me
yet
something to work with, right? 3 to 5 billion in the next 2 to 3 years is what you said a few quarters ago.
So let's stay with that.
You're staying with that as the opportunity for digital. You're not enhancing that. Look, every word you say will eventually sort of impact, the expectation for the company.
I have said that we will, if at all, we will only exceed that number, but we are not quantifying that number now.
How much of that opportunity have you already exploited? So what is the size of your digital business right now?
We don't put it out yet.
Okay, percentage figures? No?
Thank you.
You won't give us any idea? Are you on track with what you expected to achieve, or are you above your expectations?
We are comfortably on track.
Comfortably on track. Okay, fine. Is it becoming tougher and tougher to manage expectations as you grow in size, right? Because
I don't really manage expectations.
You do.
I just try to execute.
Yesterday in the analyst call, I did hear you say, look, guys, we would have liked to do 20 to 25 million more.
No,
I did hear you say that we've come in maybe a little lower than what you guys expected because of these reasons. So I'm sure somewhere subconsciously, at least you're taking into account what the street is expecting.
See, I have a responsibility to answer the questions that come in the analyst call.
Okay.
See, there were two questions that keeps coming again and again, right? One is TCS performance versus the consensus. Second one is, are we going to be better than FY14 and how much better?
Yeah.
Every analyst has asked this question.
Right.
So instead of the question to come up, I thought I'll upfront answer it.
Okay, fine. So you already warned us that FY15 might be just very close to FY14 or marginally better, but not substantially better. And you're not saying that on a size basis it's becoming tougher to manage growth or manage expectations?
In fact, I have always maintained that our size is an advantage because we look at it as a scale. So I don't at least.
But at some point the numbers are going to start, the size is going to start reflecting in the growth numbers.
So it's a question of looking at yourself and then say how you are going to act on a particular scale. And that's something that we've got to reinvent ourselves. We can't just make a statement saying that size means large means no agility means no growth. I mean, that's not a formula that I subscribe to, nor do I agree with that.
Okay. There was one thing I forgot to ask you when we were talking about Japan, and which is when do you expect margins in Japan to come close to the margins that you otherwise do across your business? Can you give me a sense of that?
I think we need to wait because, first of all, margin in Japan is not foremost in my mind.
Okay.
All I am looking at is now how do I deepen my relationship with the customers that I have, and how do I serve these customers in Japan so that they can really feel the value proposition of TCS. These are the two things I got to get right. Then comes growth, then comes margin.
Okay, fair enough. Every quarter we talk about the challenges facing a business like yours, right? Whether it's immigration policies and visas, or it has to do with global macro issues. Sounds like a repetition of a question, but I'll just put it there in case there are some new sort of risk factors that you're anticipating over the next couple of quarters, besides what you've already outlined. Anything that at this point in time is looking, as an outlier in terms of negative or positive terms?
For a repetitive question, a repetitive answer.
Okay. Go ahead.
It is basically, I think we need to execute. Execution is the key. As we take new bets, whether it is Japan, whether it is scaling up some other business, we need to continue to execute. That's one thing that we'll keep our eyes on. Second is the regulatory compliance is something that we've got to worry. While US is one specific market, but
you mean immigration, like visas?
Like visas.
That's what you mean, regulatory compliance.
Yeah, regulatory compliance. The third one is, I think, security is becoming a major issue. You see the number of security attacks on US corporations. I think we are hearing it more frequently now. So security, cyber security is a major threat. Okay. So what does it mean to us? That and to our clients. Okay. So what does it do to our business? I think that's the third one. These are the three things I would say that we've got to worry on.
A quick last question, as a business leader, not just the head of TCS, on the India sort of economic view at this point in time. Great expectations from the Modi government. As yet, we've seen very few fulfilled in that sense. You're saying the India opportunity from a business point of view for TCS is likely to grow considerably from here onwards. How are you viewing the country, investment opportunities, etc., at this point in time?
In fact, if I have to be frank, I would say that my expectations and confidence in the India is much higher now than immediately after the elections.
Okay, why is that?
I really believe that we need to give the government some time. These kind of things cannot happen in 3 months and 4 months. Okay. So I believe that if you take the steps that are being taken and confidence that's being brought in, I think the sentiment that's being brought in, I think this is doing extremely well, because the confidence that you need to give to the investor community and the business community is equally important as it is to execute. I think I'm very confident that India is going to do extremely well, and in our business we see a lot of opportunities, but as a country, I think the years to come are going to be very, very good.
All right, Chandra. On that note, happy Diwali to you and your entire team. Thanks very much for speaking with us, and we'll see you next quarter.
Thank you. Happy Diwali.